It's time to talk markets here with Tyler Schau. He's with agmarket.net. Tyler, how are you doing today?
Doing really good. Good to be back with you.
Yeah, absolutely. We ran into each other at Commodity Classic, if I remember correctly, right?
Yep, yep.
Yeah.
Down in Orlando.
Nice. Oh, man. Right there next to Disney World.
Yep.
Okay, let's talk about the markets. Let's start at 100,000 feet. We've kind of got this market. Like I got a spring wheat chart up right now for December, and I'm kind of looking at it, and a lot of the other charts look the same, where we're kind of just sort of grinding to the side, and one would even say grinding kind of lower. What is your take here as you look at all these different commodity complexes?
You're right. It's been a slow grind lower since that last weather scare that we had in mid to late July. A lot of analysts, a lot of folks have been calling for some type of a bottom here in the wheat market, especially for the last month to 2 months, really. If you look at that December chart, the month of September has just kind of been a flat month. We see a little bit of a pop up. We see some sell off. We're kind of really stuck in that 760 to 790 range. Um, the farmer's not going to like the answer I give here. There's not a lot of uh, news stories out there that could spark the bullish movement that they want to see, right? Like farmers want to get back to that. Boy, what I would give to be able to sell $9 wheat again.
Yeah.
Um, the war story seems worn out and tired. Um, you know, the one that was in our back pocket for a large part of the summer was the drought that you guys had in Canada.
Yep.
One of the things I've been reading is yes, your production is down, but quality was very high. A lot of high protein wheat that got produced in Canada this year. A lot of farmers. One of the baffling things for me, and this is one of the reasons it's hard for me to get real bullish any commodities right now. But all summer I listened to farmers and agronomists both, and especially in the northern tier of North Dakota and eastern half or eastern third, I would say, tell me just how bad the wheat crop was going to be and yields were going to be terrible. And they were telling us something, 40 to 50% of average production, which, in a lot of those areas is 70 to 80 bushel wheat on average. So we were penciling that into our spreadsheets and thinking, yeah, there's going to be a real story here. And then all of a sudden harvest comes along and they're average or better. I hear a lot of stories in some of those areas that were telling us their crop was terrible that grew 80 to 90 bushel wheat.
Oh, wow.
And so, that's one of the stories that if you pay attention to basis levels in North Dakota, they just got hammered in the last month and a half. They're not popping up yet. I know a lot of producers are now storing grain, waiting for that price, telling me it's got to come back. And I think we'll see a little bit of a pop, but I'm trying to gear my producers up to be ready to sell on rallies, in that 8 to 830 range, just because I don't know what's going to push us higher right now.
Yeah, I've been talking on Real Ag Radio the past week where anecdotally it seems I've been hearing a lot from the audience is that yields are either at or above where they thought they would be across a lot of the commodities, especially in the cereals. Now, if we have a little bit maybe better supply, if I could put it that way, than maybe we thought coming into harvest on some of these crops like spring wheat, what's the demand equation? Like, what does demand look like? Because heading into the summer, all I heard about was China's a disaster and demand's not going to be strong for things like corn and soybeans. How is demand shaping up right now on the global stage?
Demand doesn't look overly promising, and I'm going to kind of some of that is actual demand. You're right. We were looking for China to come in and be this huge buyer of commodities. They are buying commodities. We know they are. They're just sourcing it from other countries right now. The second thing you've got is just large production areas around the world. Russia produced a huge crop. They're so much cheaper than U.S. and Canadian wheat right now. They might not have the quality. So, I mean, there's always going to be that, U.S. and Canada is going to be where the world comes to get their quality or their high protein values. But the world buyer, I promise you, the world buyer, 2 years of paying $8, $9, $10 wheat has figured out a way to substitute around some of that here.
Mm.
You give the buyer long enough, they're going to figure out a way to substitute and make do with what they can get their hands on. So I think there's some of that going on, but I just think supply in other areas, uh, like I said, Russia, Brazil, the story in Ukraine was there for a long time as to whether or not they've been able to ship it. Clearly, they've been figuring out how to get that product out of the country and into other locations. So I think it's a twofold story. You're right. Demand is kind of poor, but it's also just the supply out of other areas of this world that's just pushing us down. And then the last thing I got to say is it's really hard to see in the U.S. anyhow, to see a substantial export business when we've got the dollar over 106 on the dollar index. One of the things that we look at for world economic growth is the metals, and metals have just been, they have their little pops up, but for the most part in a downward trend for quite some time. And really in the last few weeks, big sell off there. So, I'm not, overly excited about world demand right now. And so it really is going to come down to what does supply do? And do we have some supply shortages that pop up around the globe?
Yeah, maybe there, fingers crossed there's something out there that does surprise us. Now that's shouldn't necessarily be our marketing plan, hoping that happens. But and so if I expand out the duration of say the spring wheat chart on December,
Mhm.
it makes me sort of like, I look at the last year, we're really going to new lows. But
Mhm.
if you expand it out in say 5 years,
Mhm.
we're a good $2.50 higher than some of those lows. Like how should I be looking at this? Is this a drift to a five handle, or is there like can we stay in the sevens? Like how I'm just sort of curious how you're a little bit bearish and cautious. A bit of a test here. How much so?
It's enough to where I'm trying to get some guys to look at even pricing some of next year's crop. The September uh 24 contract is still hovering around that $8 range. About
Okay.
794 was the settlement yesterday. There hasn't been anything traded on it today. I mean, you hit the nail on the head, and I've been talking to producers about this. Like, even at today's price, you can say, "Oh, it's terrible," and when you look at the last 2 years, yeah, today's price is not an attractive price. And I'll be right honest with you, today's price with last spring's inputs doesn't pencil out all that well. The saving grace, at least in North Dakota, is going to be the high yields. A lot of growers
Right.
outperformed APH by a good 10, 20, 25%. And that's what's going to hold this together for them this year. But you are correct. When you take that 30,000 foot view, boy, 2015, 16, 18, 19, 20, we'd have been uh, doing jumping jacks at the opportunity to sell $7 wheat. So,
Yeah.
don't, sometimes I'm an old cowboy, so I use the saying, don't look the gift horse in the mouth too long, because, it might not be all that great right here, but there's room to push. I don't know how realistic $5 is right at this moment, given the fact that from major exporting countries, our ending stocks are predicted to be at like 14-year lows.
Mm.
So there's some problems. You've got a problem with the Australian crop. You've got some stuff going on in India. You got quality concerns around the globe. So don't get me wrong. I'm not saying there's absolutely no reason to stay here or go higher, but I'm not just superly ambitious. And like I said, I'm going
Yeah.
to be jumping all over any opportunity.
That's fair. One of the things that I have really found kind of confusing and cloudy is trying to get my head wrapped around exports out of the Black Sea region.
Hmm.
The grain deal on, grain deal off. How can we ever expect Ukrainian grain to get out of the port? Like, will it be going through places like Poland? It's been very, very confusing to really know what will the supply be out of the region. It just feels like it's been ultimately throughout this war, it's been higher than many people actually thought it would be.
One of the guys that I work with, he's been in the grain trade business for many, many years. And one of his comments the other day on this was I don't know why we're surprised at Ukraine's ability to get grain moved. The grain industry is the most capitalistic industry there is on the planet. And that's just, that's economics 101. I taught micro and macroeconomics at a college uh, for a lot of years. We'll just leave it at that. And he's correct. That the goal of a marketplace is to figure out how to get a product from where it's at to where it's needed. And yeah, there was some roadblocks, issues with ocean transport. They figured out a workaround. They figured out how to push it via rail. They're figuring out how to move it on the water again now. So even without the export deal, they're gonna find ways. The market did its job. It pushed higher there in the spring of 22 to try to encourage that movement of grain. And I think, like I said, traders, farmers, analysts have been, wanting to, how do we get ahead of any possible disruption in the Black Sea? But like I said, I think the market now has just finally got tired of that whole narrative and realized the grain's going to move. And I, now I say that, and if something really large escalates, now you've probably got a story. But there again, that's hanging your hat on hope, and marketing plans don't work well on hope.
But be ready though, right?
Yes.
So that
Yeah.
something like that breaks. That's there's a pop. That's an opportunity to take care of some business, not necessarily keep your hands in your pockets.
Yes. Yes.
Yeah.
That's a very good point. And one of the things that I'll talk to a lot with former students, with current customers, on marketing plans is to have a plan, but be ready to make the adjustment to that plan. Because, contrary to popular belief, Chicago and Minneapolis don't call me before the markets move. And I'm not sitting with a crystal ball in my office. We can't predict all those things. So your plan's got to be there. It's got to be flexible. But as you said, when you get those opportunities, you got to take advantage of them.
Yeah, absolutely.